So somebody's looking, say, oh, silver, when is it going to go up? It's not going up. Well, when the capital flows start leaving the US equities and they start going into gold, then silver is going to go ballistic. The miners are going to go ballistic.
Well, it's our pleasure today to bring on Patrik Karim. And he is an eminent chart specialist. And what's interesting is because in our world, we're very much focused on the fundamentals, where the wholesale levels are. And, you know, sometimes, and obviously technicals are very, very important. So, and obviously, especially when you start to look at where these aggregated bids might be on a different time levels. But I think Patrik has got a lot to bring to the table. So welcome, Patrik. And if you could walk us through some of your thoughts. Obviously, we're seeing a lot of volatility right now. So maybe start on the short term and then perhaps look at the bigger picture.
It's guys, first, it's an honor, Andrew. I've watched all your podcasts. I can't believe it. I'm talking with you right now. It's a true honor. And well, like the way I see it, I took a backdoor entry to the whole precious metals complex because of the chart trading. Eventually in 2018, I saw that gold was breaking out versus Canadian dollars. It was breaking out versus Australian dollars. I said, what's happening here? This thing is breaking out against all these fiat currencies. But before that, I was in the mindset. I didn't really understand fiat currencies. They were measured against one another. It's like an oscillator, and it hides their true weakness, because when you measure them in something real, then you see the long-term charts. They're just all these fiat currencies. They're just going down the drain. But then that's when I knew that we had an arbitrage play with gold expressed in US dollar, because when you look at all the charts breaking out versus all these currencies, man, it's a question of time. This thing's going to break out versus the US dollar. And that was back in 2018. And since then, like, I haven't looked back. And that's like the beauty of the precious metals complex is you look at the gold and then, oh, baby brother silver. Oh, then you learn about the gold silver ratio. Then you see the gold silver ratio actually looks like the VIX chart. It's able to sniff out imminent market liquidity crunches. It gives you hindsight. So those are commodities, they're money, they're financial instruments, right? These charts, they actually represent the financial health of the markets. And yeah, so I think I took a backdoor entry through my chart trading to what you've learned over the years through like the fundamentals, through like all your experiences. It just, I wish that on everybody to look at the precious metals complex, because it's a gateway to the health of everything that we're dealing with right now, right? There's this great chart, Andrew. It's the gold to SPX ratio. And that chart, when the gold to SPX ratio starts turning in one favor or the other, and right now it's the SPX is about to start losing versus gold. Gold's about to start outperforming versus SPX on the like a long-term time frame. Just that ratio chart, it looks exactly like the silver chart. So somebody's looking, say, oh, silver, when is it going to go up? It's not going up. Well, when the capital flows start leaving the US equities and they start going into gold, then silver is going to go ballistic. The miners are going to go ballistic, because that's all that's missing right now. It's a true transition. And I think since 2018, 19, it takes years, this stuff to play out. You can't look at like too close a time frame. But we're turning a corner right now. So once those capital flows, for whatever reason, inflation or all the macro tidal waves behind it, start going to gold instead of US equities, man, like hold on to your miners, guys, or hold on to silver at least, and the metals, because those are they're going to have long, strong, meaningful trends.
Yes, that's really interesting. And so obviously, you've got this chart here, gold and silver 16-year moving averages since 1932. It's nice to step back and look at the big picture occasionally, Patrik.
It's this I put out this picture because there's always this is the problem of silver. It went ballistic in the 1980s. It went ballistic in 2011, but for short periods of time. So when you're considering macro tidal waves, these short period of times, they're not that meaningful, right? Because they're on the end of the curve of, like, you know, those bell curves, the statistics. There were a lot of fear of missing out, a lot of people talking about silver. But if you take a step back, that chart, I have the 16-year moving averages for gold and silver, and starting back at 1930 or something. And you see over time, these just been going up and up and up. And people saying, gold and silver, or at least silver is way below its 1980 peak or 2011 peak at $50. But look at that moving average. We're way higher than where we were in the 1980s. It's just this roadmap is just taking a long, long time to play out, guys. And I could have probably overlaid the money supply on top of that, or all the other financial instruments. Essentially, these things are skewed to go from bottom left to top right over time. But that's where the timing comes in. It's to try to buy, not in fear of missing out when silver's at $50. It's to try to understand where it is in the landscape of the financial world. Like I said, the gold to SPX ratio. If we're at a turning point, and now we know with TA, technical analysis, that the opportunity cost is lower and lower because we're approaching an important major turning point. Yes, we could be off by 6 months, a year, but when you're talking about gold and silver, those are small time frames. If you're able to catch the turn, then if you're able to hold on, because that's another thing, there's just the volatility of silver is going to shoot up 100%. It's going to rip your face for 2, 3, 4 months. Then it's going to consolidate for 6 months, 8 months, 2 years, going sideways like we've had now. But if you get in early, you won't feel forced to sell when you have those drawdowns, right? It's the people who buy it, fear of missing out, that like the people who bought Bitcoin, let's say at 60,000. Now they're kind of trapped emotionally because Bitcoin goes down and they're hoping that it always keeps going up. But if they would have bought, like the TA was telling them to buy when, let's say Bitcoin was breaking out at 10,000, when Michael Saylor was not talking about Bitcoin, then you were creating, then when you have a pullback much higher up going down, you're less susceptible to sell because of, you're still in the profits, right? So you're not afraid to tell your wife that you're still in the profit. But if you never want to tell your wife that you're losing money, right? So you rather hold on and hope it goes back up. So understanding that silver is cheap, and even gold, where it is now today, it's still cheap, but silver is way more cheap than gold right now, relatively speaking, especially when you measure it versus gold or versus the SPX. Then when it goes ballistic to 50, 60, or $80 and it pulls back to 30 or 40, it's still much higher than what it is today. And that's how you're able to ride these lock steps, or these ladder steps through a bull run. You can't get in late. Look, if I don't know if CNBC would be touting silver today, I'd be doubtful, But look, I'm getting hate. I have so many trolls, Andrew. You can't even believe it on Twitter. It's crazy. But that means we're still at a good moment, that there's really nobody thinks. Everybody thinks silver's going to crash. Everybody thinks gold is maybe there's going to be deflation. Inflation's transitory. You still hear these things out there, right?